Hi, and welcome to the International Rescue Committee's video series on working as a gig driver. Over the last few years, gig driving opportunities such as Uber, Lyft, and DoorDash have become a popular way to earn income. Whether you're thinking of using gig driving as your main source of income or to supplement your income, there are many things you'll want to know to optimize your earning potential. In this series, we'll review considerations for starting as a gig driver and ways to financially plan for your gig driving business to make the most out of these opportunities. Part one of this series will focus on starting as a gig driver, including company, driver, and vehicle requirements, and other tips from experienced gig drivers on how to prepare for this type of work. Part two of this series will focus on financial planning for your gig driving business, which includes strategies to optimize your earnings, budgeting, and tracking towards your profit goals, and paying taxes as a gig driver. Let's dive into part two, managing your finances for your driving business. During this video, we'll discuss how to manage your finances as a driver. We'll talk about setting a profit goal, having a business plan or strategy for your driving, tracking your business finances, and how to report your taxes and tools for tracking your progress as you go. As we mentioned in part one of this series, gig driving is a small business. As a gig driver, you decide on the companies you want to work with, your hours, and the gigs or jobs you'd like to complete. For these reasons, it's important to have a plan for what you want to accomplish and how you will achieve this. You'll want to start by setting a goal. Make a personal budget for yourself, looking at your income and expenses, and use this to set a profit goal of how much you'd like to take home every month from your driving jobs. There are a lot of expenses, both expected and unexpected, that occur when working a driving job, so you won't be able to take home all the money you make in a month. By starting with a goal, it will give you an idea on how much you'd like to earn from your driving business, so you can plan from there. Now that you've got your goal, you'll want to come up with a strategy for how you're going to achieve this profit goal. You'll think about your driving schedule, locations, customer service, and take note of which strategies are most successful in increasing your earnings. We'll look at these three strategy areas more closely and review some tips from other drivers on making the most of your driving work. Like any job or business, you want to create a schedule for when you're going to drive. Driving on random dates and times is not only unsustainable, but it likely won't result in the best profit for you. When coming up with a schedule, think about what days of the week will you drive? If you have other commitments, you'll want to plan around that. But also think about what days might be busier for the apps you're using. For example, weekends and days surrounding holidays are generally busy for food delivery or rideshare apps. Next, think about the time of day you'll drive. Is late night busier since public transportation is less reliable or more likely to have food deliveries? Would early morning or late afternoon be busy for people commuting to work? If you're working a food delivery job, think about working around standard meal times when people are more likely to be ordering food. Lastly, research if there are any surge pricing times where you make extra money due to high demand. It's important to note that although you can make your own schedule, most of these apps require that you work at least once a month to keep them active. Take that into consideration if you're thinking of taking a break or reducing your hours. Now let's talk about location, location, location. Some of the most important advice from drivers is to avoid driving around randomly. It's a waste of your time and isn't optimizing what you can make from your driving schedule. When deciding on what locations to work, think about where are the busy areas. Depending on the time of day, these could be downtown or Main Street areas with a lot of business and activities. You could focus on transportation centers like airports or train stations, areas with a lot of businesses or offices, universities, especially for food delivery. You could also prioritize working on days where special events are occurring, like concerts, shows, sports games. As you drive more, You'll learn which locations and what schedule will help you in reaching your profit goal. If you're first starting out, test out a few options and take notes so you can devise a plan for how you'll focus your driving business in the future. Another thing to keep in mind while creating a strategy for your business is customer service. This is a service-based industry. Your ratings are important in your future earning potential. The better ratings you have, the more gigs you'll have available, and the more favorable the gives. For example, higher ratings may mean higher paying gigs at shorter distances, which is great for your driving business expenses. Some important tips to keep in mind on customer service are to always be friendly and polite with customers. Try to greet your customers and ask them how they're doing. You can engage in basic conversation, keeping it light and not asking too many questions. Some customers will want to keep conversation going, and you want to be polite and do so, while others might prefer not to speak. Another tip is to call the customer if you cannot find them or find their home. Rather than delaying your task searching for the person's location, you can give them a call and ask them for directions to their location. If you're working in rideshare where you'll have customers in your car, it makes a difference to cater your vehicle to the comfort of the customer. Try to keep your car clean without strong smells or very loud music. You can ask the customer when they come into the vehicle if they have a preference for the temperature or music to customize to their needs. Some drivers even go so far as to have water, chargers, and other amenities in the back seat of the vehicle for their customers. Lastly, it's important to remember that canceling a ride or delivery can lower your ratings. Try to only accept opportunities that you know you'll be able to complete and allow yourself some scheduled breaks throughout your driving time so you don't feel the need to cancel. So we've talked about creating a strategy for your driving business on how you'll make the revenue you'd like. It's equally important to think about how you'll track and manage your business finances to reach this goal. When we talk about business finances, there are a few key areas we'll look at. Business expenses or outflows, which are the costs of your business. Business inflows and revenue, the money coming into your business, and profit, which is the money you have after you subtract all your expenses from your inflows. Your profit is not necessarily the same as the money you're going to keep in your pocket for yourself at the end of the day. You'll want to make sure you're saving some profit to pay your taxes and put aside some for savings. This savings will help you pay any expenses in the beginning of the next month for investments into your business, such as a better phone or a car purchase in the future, as well as provide a resource if there's an emergency repair needed. To make your life easier, it's best to track your expenses and revenue as you go, looking at every month to make sure you're making the profit you'd like from your business. A helpful way to track how you're driving business is by creating a cash flow budget to track your monthly financial progress. We'll show you an example in a bit. Running a driving business comes with its share of expenses to keep the business running smoothly. Some common expenses that come with a driving business include car payments. If you have a loan, you'll want to budget for these expenses. Car maintenance. Your vehicle is your source of income, so you want to keep it in top shape to avoid any unwanted issues. Getting regular oil changes, new tires, and other items will make sure you're keeping your vehicle ready to drive. There's also other items required for a driving business, such as insurance, gas, tolls, fees, your phone and your data plan, and any interior features like seat covers that you might use if you have customers in your car. It's likely that you're going to be using your vehicle and some of these other items, such as your phone, for more than just business. When you calculate your business expense, you'll calculate this as a percentage of time based on how often you're using these items for work versus how often you're using them for personal reasons. If you're driving 30 hours a week for work and 10 hours for personal use, then you'll want to calculate that as a percentage of your time. Lastly, you want to make sure you're paying yourself, that you're taking home money from your business. This will usually be the last expense you take out after you look at your income and expenses. But the aim is to get this amount to your goal. And if your strategy is working, higher than your goal. These expenses can all be included in your taxes as deductions. So you want to make sure you're keeping track as you go so the information is readily available for you when tax reporting comes along. You can track a variety of ways, such as keeping a notebook in your car where you write down the money you spend and your mileage. You can keep an envelope where you put all your business receipts. You can also use an online spreadsheet or phone app to track. Whatever is easiest for you, just make sure you're doing it as you go so you make less work for yourself later. Now let's look at your business inflows. This includes any money you're investing in the business and any revenue you're earning from driving. We recommend that you record this at the end of every driving shift to help you get a better picture of how much you're making from driving. As you go, you can start seeing which strategies are most effective in earning more money. For example, you may notice that driving on a Friday in one location earns you higher revenue than another. You'll start to see patterns and you can adjust your strategy to optimize your revenue. You can also project how much you'll make based on a few rides. This will help you determine if your plan is going to earn you the amount you need to reach your goal, or if you need to take a new look at your plan. Below this video, there's a link to a document you can use to make this projection. Now that we have a profit goal, strategy, business inflows and outflows, it's time to put it all together in a cash flow budget. A cash flow budget will show you how your money is moving through your business over time from month to month. You'll start out with a beginning cash balance each month. This is usually what you have left after you cover all your expenses and pay yourself. You'll then record your cash inflows, which is the money you're taking in from the business. As we mentioned in the previous section, this can include your revenue and other funds like loans, grants, or match savings you receive. Next, you'll record all your outflows or business expenses. Notice the other outflow category, which includes your capital purchase or car purchase, the funds you're keeping aside for yourself, and some money set aside for taxes. Now see at the bottom, we have our ending cash balance for the month. This will carry over into the next month, which we can use to start our expenses off for the following month, or if we have unplanned repairs or things we need to take care of. A cash flow budget allows you to track your actual expenses and business revenue and use that to evaluate how you're doing in your business. From there, you can see if any changes need to be made and plan accordingly. Let's look at an example. Abdu lives in Sacramento. He works part-time at a local store and takes English classes part-time. He got his license last month and purchased a car with the help of an auto loan so he could easily get to work, school, and pick up a side job. Abdu is working part-time doing a delivery driving job, Fridays through Sundays from 6 p.m. to 1 a.m. Abdu's goal is to earn $500 a month for household expenses and to save towards getting a larger apartment. Abdu records his revenue after every shift in a notebook he keeps in his home. He's making about $615 every 2 weeks, or $1,230 a month. Abdu has been trying out new locations to see which will earn him higher profit and recording which have been the most successful. Now let's look at Abdu's expenses. He's got his car loan payment, insurance, gas, phone, and car maintenance expenses, which he calculates as a percentage based on the time he uses it for his driving job and the percentage of time he uses it for personal or for his other commute to work. His total weekly expenses add to about $121 and $483 for the month. Looking at Abdu's revenue minus his expenses, he has about $187 left over every week, or $748 every month. What should Abdu do with this amount? Abdu has decided to be proactive and take out 25% of his profit to put towards his taxes, then pay himself the $500 he set as a goal, leaving some extra to put towards next month and for savings. Abdu will now have $61 to start him off for his next month of driving. At this rate, Abdu will have money to start himself off the following month, have some cushion in case he has an emergency repair, and continue to add money to his business, allowing him to invest and increase his earning potential over time. Abdu is doing an excellent job in creating a business strategy, keeping track of his business finances, and adjusting his plan as necessary. With this planning, we can see Abdu making above his goal in no time. In addition to keeping track of your expenses and revenue, you want to plan for paying taxes for your driving business. As a driver, you're an independent contractor. You're not a formal employee, meaning there are no taxes taken out of your paycheck. If you're working and making more than $400 while driving a year, you are required to pay taxes on that income. To pay your taxes, you'll need to provide details on the revenue you've made, as well as your business expenses, which may be considered deductions and can reduce the amount you owe in taxes. We'll go into tax deductions in a bit. To make sure you have no issues reporting this information, you'll want to stay organized and keep all this information in one place, in a notebook, in a spreadsheet, or an app if you'd prefer. You can use a tax calculator to estimate your expected tax rate and put that money aside in a separate account or another safe place so you have it ready when you have to pay your taxes. We recommend putting aside about 25% of your revenue just to be safe and to make sure you have enough set aside to pay your taxes when that time comes. Let's dive deeper into deductions. Deductions are expenses necessary for your business that you can subtract from your taxable revenue to lower the amount of taxes you owe. It's basically saying that these expenses were needed to run your business, so you shouldn't have to pay taxes on them. For drivers, there are two types of deductions you can claim when you file your taxes: operational and vehicle deductions. Operational deductions are the cost associated with running your driving business. Vehicle deductions are the costs for using your car. Operational deductions include things like fees or commission, personal protective equipment like masks and hand sanitizer, wipes for your car, a portion of your cell phone plan, chargers, and accessories for your cell phone. All the items you need to operate your business that don't have to do with the cost of your car. When it comes to vehicle deductions, you have two options for calculating: using a standard mileage deduction or your actual vehicle costs. The first option, the standard mileage deduction, is the most common option used by drivers because it's much easier. This calculation takes into account all driving costs such as gas, repairs, maintenance, and vehicle depreciation. The IRS sets the mileage rate every year, and all you have to do to get this deduction is multiply the miles you drove while working by the rate. The rates for 2022 were 0.585 through June 30th and 0.625 from July 1st through December 31st. In 2023, IRS has actually increased the rate by a few cents, so this will be a little bit higher. For example, if you drove 500 miles last month while completing deliveries, you would multiply 500 times 0.625, meaning you'd have $312.50 in deductions for last month. Easy. In addition to the mileage, you can also add any tolls or parking fees you incurred while working. So let's say you had $40 in tolls from crossing bridges while delivering. You'll add that to the mileage deduction amount and have a total of $352.50 for your vehicle deductions. If you decide to use this method for vehicle deductions, the most important thing to do is track the miles you drive as you go. You can do this with an app like Stride Tax, Sherpa Share, or Mile IQ. You can also use a spreadsheet, or you can keep a notebook in your car to record how many miles you're driving while you're working. Whatever is going to be easiest for you in keeping this information up to date. The second option for vehicle deductions is to track your actual vehicle cost. This includes all the costs to drive your vehicle, including gas, maintenance, repairs, insurance, vehicle depreciation, and other related expenses. Tracking actual car expenses requires detailed record keeping and keeping receipts of everything you're spending. So if you decide to go with this option, you may want to see a professional for tax assistance. Now you want to keep record of all your income and tax obligations so you can pay your taxes on time. As we mentioned, it'll be easier for you if you stay organized. You want to keep track of your income and expenses, and you can see your income on your driving app dashboards. You want to put aside some of your revenue towards taxes. And like we mentioned earlier, we recommend keeping about 25% of your earnings aside for tax purposes. Then you'll keep track of your mileage and your deductions. If you make more than $400 in a year, it's recommended you file your taxes quarterly to avoid a fee from the IRS. Quarterly taxes are due April 15th, June 15th, September 15th, and January 15th for the previous year's last quarter. You can file your taxes online at the IRS's website by completing a 1040 ES form and even pay your estimated tax obligations on that same website. Keep record of your quarterly tax filing and payments so you can provide when you do your yearly tax return. In addition to filing quarterly, you'll need to complete a yearly tax return between January 30th and mid-April of the following year. The annual tax return compares your estimates from your quarterly taxes with your actual tax obligation. The driving apps you're working with will usually give you the option to request a 1099 form at the end of the year, which lists all the income you made on that platform throughout the year. You'll use these 1099s, the records of your quarterly filings, and any other income you earned throughout the year to file your tax return. To complete your tax return, you can do so online, or you can go see a tax professional for assistance. If you have any questions on how to file your driving business taxes, we recommend going to a tax professional for assistance. Start with that plan. Create a profit goal, your driving strategies, create a cash flow budget to record your revenue expenses, and plan for your taxes by calculating your deductions and putting some of your revenue aside to pay your taxes. Staying organized will be your best tool in ensuring your driving business runs effectively. You can download an app, spreadsheet, or keep a notebook to track your mileage and expenses, update your cash flow budget every month, and keep a calendar of when you'll need to file your taxes. Make sure to keep all this information in one place so it's easy for you to access when you need it. Lastly, you can use all of these financial management and organizational tools to look at how you're doing with your driving business. If you're not achieving your goals, you can spot that early on and revise your plan so it works for you. With all these tools, now you're ready to get started making the most of your driving business. Some of the resources mentioned in this video are linked in the description below. If you have any questions on managing your finances, you can reach out to a financial coach at a local IRC office or through the SAFE project by going to safeirc.org. Thank you for watching and happy driving.